Chananda. Thanks for those corporate headlines there. But just a quick mention on the way the pre-open's panning out. Looking steady, you got the benchmark indices both in positive. Mayuresh Joshi, fund manager at Angel Broking, also joining in. Mayuresh, thanks for taking the time out today. What's it looking like? 8600 back on the screen. Can this last?
Morning, Priyank. I think the range that we are working out with, it has breached the upper end of the range. And clearly the markets are ignoring certain aspects that they were concerned about a few weeks back related to earnings, monsoons, the monsoon session of Parliament. So some resolution on the Brexit front is causing calm into the markets. But clearly I think any disappointment on all these domestic factors or any of these domestic factors, I think will have the markets coming down again. So I think I'll be extremely cautious when I look into the markets at the current juncture. But yes, I think a stock-specific approach is still something that I'll be mandating for.
All right, Mayuresh, hold that thought. We've got a slew of earnings impact to watch out for, especially from the non-index space. ACC is a large cap that you're awaiting numbers from, but Mindtree, Delta, Man Industries, these are some of the ones that are actually buzzing already in the pre-open is what we're seeing. These guys, these stocks have been seeing some handsome gains. Mindtree is up 2.3 in the pre-open. Delta spiked almost 7% in the pre-open is what we've been seeing, and Man Industries as well is the other one, up almost 6% in the pre-open. So let's see how these stocks open up for trade with just a few seconds left for the markets to kickstart trade. And you'll also be watching out for some of the outperformers recently. Yes Bank and Axis Bank are actually a little weak in the pre-open. They will be in focus as well. And then among the gainers today, Ambuja, Gale and Sun Pharma in the pre-open, that's where you're seeing some bit of traction coming in. So let's see how these stocks play out in trade. But ACC is a large cap that will be reporting numbers, and the opening that we're seeing is a little steady. 8619 now on your screen is what we're tracking. Yes Bank seeing a little bit of a cut, 2% lower. Axis Bank also seeing a little bit of a drop now, 1.5% down is what we're seeing on these two banking majors. So that's where the weakness is today. Kotak Mahindra Bank also just losing out after yesterday's huge gain. M&M, Sun Pharma, Tata Steel and Tech Mahindra are a couple of the stocks that are showing some bit of support. Delta spiked in early trade itself. Earnings impact for that one is what we're seeing. Man Industries is the other counter that's been showing some bit of reaction to its earnings as well. 4 to 5% higher is what we're seeing. In Mindtree, that's the mid-cap IT name that's in focus as well. Just pull that stock up for you. That's Delta there. Mindtree 3.5% higher is what we're seeing. But apart from this, it's been a pretty quiet start so far. 8620 is what we're seeing on the index. It's probably the mid caps that have been buzzing in trade today, and where we're seeing stock specific action. On the large caps, it's fairly muted and fairly quiet.
All right, let's take a look at some of those mid caps as well. On our screens, we've got, let's just pull up the index for a moment too. We've got just a marginal uptick on the mid-cap space. Shree Cement, SR Oil, some of the names on the higher side. BEL, Crompton is once again moving, a bit of news in that counter too. UB so far looking good. Mothers and Sumi is up about 0.7% right now. Torrent Power, Adani Power, MRPL, some of the other names there. Biocon continuing its up move that we've seen lately, and then we've got just a little bit of an up move in, for instance, a Reliance Cap, a JSW, a Naveli, for instance. Overall okay, the market breadth is positive. No fantastic moves, but still holding steady for now. On the downside, a marginal downtick in an Oberoi Realty, IndusInd Bank, GMR Infra, for example. Some stocks that are cooling off ever so slightly. We do have a few stocks in news that we just run you through and see like if there has been any reaction on those names. So for instance, we do have Wockhardt with a recall that's in focus. Let's just pull up that stock and see how it's reacting to that. Some of that coming in. So just down about 0.6%. Crompton, we mentioned they've got a new contract. That's why they're trending higher. We've got GE Shipping in news on the back of raising NCDs, funds via NCDs. That stock's in focus today, up marginally. Shipping continues to be in focus. We were talking about that earlier. Defense continues to be in focus as well. BEL is another one that's that we're tracking for you this morning. People are also up 1.5%. So that's what the picture is looking like on the mid-cap front. Mayuresh, in fact, let me get your take on some of these other themes in the market that we have actually been focusing on. Priyanka was pointing out in the morning that the Baltic Dry Index has seen a bit of an up move. So we had shipping stocks moving, we had defense on the back of all that buzz with new orders coming in as well. That was once again in focus too. Any of these pockets looking exciting to you?
Morning, Abba. So clearly, I think shipping is one industry that I'll still stay away from at this point of time. I think the numbers are not expected to come out great, and even if you see some amount of movement happening on the Baltic indices, I think it's not a clear indicator on how the balance sheets are shaping up. So I think a clear no-no in terms of how the shipping companies will pan out, at least from a medium-term perspective. When it comes to these defense-related companies, I think BEL, BML, in my opinion, should gain significantly with the kind of government push that you're probably looking at. The BML specifically, in my opinion, should do well once the mining activity has started in a big way. And clearly, I think that would have a huge amount of impetus as far as the earnings are concerned. Similarly, for BL, I think the kind of order wins that it is expected to gain from the army, as we heard from reports, and the utilization levels that it is currently operating out of, I think it looks like a very lucrative pick. So I think, yes, defense is one theme that I'll probably look at. So BML is something that I'll prefer along with BL.
Fair enough. So that's as far as a couple of those themes are concerned. Let's talk some of these earnings impact names as well, Mayuresh. Mindtree in focus, Delta seeing a profit from a loss on a year-on-year basis, and Man Industries. These three mid-caps have been the big movers straight away early in trade. Any thoughts on any of these counters?
So clearly, I think Delta and MAN are out of our research coverage, but clearly within the IT theme, the large cap is still something that we continue to prefer. Our take is that though the earnings hit might be evident in this quarter related to visa costs and the wage hikes that a lot of these IT companies will face in terms of headwinds, the currency tailwinds is something that can then benefit a lot of these IT companies, along with an uptick in the utilization levels. So clearly, I think client mining activity going up, client wins going up, discretionary demand probably remaining strong, specifically in the US markets. Europe showing signs of stability as far as the IT companies are concerned. A cross-currency growth of anywhere between 10 to 12% for the lower tier IT companies, and for the top tier anywhere between 12 to 14% is not ruled out. So I think if the cross-currency growth is quite significant going forward for these top tier names, I think top tier names is something that we'll still continue to like. So TCS, Infosys, HCL Tech is something that we'll still continue to prefer.
Fair enough. Just seeing the way the screen's panning out, ACC is the top loser, down 1.7. We're awaiting numbers as far as discount is concerned today. Yes Bank, Axis and Kotak Mahindra Bank, some of the big beneficiaries yesterday of the entire composite cap, but it seems that they're just losing out a little bit. Mayuresh, put this into perspective. If they do really stand to gain, what kind of an impact do you believe will actually take place for some of these banking majors here, the likes of Axis, Yes Bank and Kotak Mahindra Bank?
So clearly, I think our positive take on the private space continues. So I think Axis, yes, should be key beneficiaries, not just from the composite cap. I think the earnings momentum should drive the return ratios quite significantly over the next couple of years. Simply put it in perspective, I think take the case of Axis Bank. I think the kind of restructured and slippages that the bank was envisaging last year, the numbers came in much lower than that. Again, I think the kind of credit cost that we are working out with, around 80-85 bips for the current fiscal, I think if that pans out and you're seeing a decent amount of credit growth taking place, I think the credit cost might actually come down for a lot of these banks. Coupled with slippages going down, with improvement in economic activity, I think it will have a huge impetus in how the earnings will pan out. So our take is that earnings growth in excess of 21% of Axis Bank is not ruled out. And again, I think the kind of counter-cyclical provisioning that both Axis and Yes Bank have probably made, it also takes into account any bad loans that probably slip through if not envisaged by the banks themselves. So clearly, I think the provisioning is there, the capital adequacy is there, the bank network is very strong, CASA is extremely strong for Axis. Yes, is building up on its liability franchise, but clearly I think the valuations, even though at a premium to the public sector counterparts, should hold out. I think I'm extremely positive on banks like Axis. Yes, any sharp decline onto these banks become a very good buying opportunity for long-term investors.
Okay. What about Tata Motors, Mayuresh? A bit of fundraising on the cards there. We've also got the stock. According to you, would you say possibly bottoming out right now? How are valuations looking to you?
So clearly, I think valuations very much in support of Tata Motors at the current juncture. So from a 52-week high, you've seen the stock come down to a 52-week low. for obvious reasons. I think the China slowdown that you're witnessing in terms of volume degrowth, clearly I think is taking an EBITDA margin erosion on the JLR side. The Evo cut that they've taken of around $8,000 odd, the price warnings coming in from BMW specifically for the Chinese markets, in my opinion, I think have been largely factored into the price when I look on a consolidated basis. On a standalone basis, I think the PV segment is showing strong traction with good launches coming through. And even the MCV side, I think that is showing signs of bottoming out. So my take is that with new launches coming in, the modular platform strategy would work exceedingly well for JLR going forward. And China, in my opinion, should show some amount of rebound, at least in the next 2 to 3 quarters. So I think a lot of discounting and factoring in terms of bad news is in the price. Any further decline onto the stock should become a good buying opportunity for long-term investors, and valuations again at the current juncture extremely attractive for Tata Motors.
Punjab is up almost 12% is what we're seeing. Some good volumes coming in on that one. JK Tyre is the other counter that's showing some good strength. Aztec Life Sciences 10%. Good volumes on that counter. Prism Cement up 4% is what we're seeing. There's some of the volume movers that we're seeing straight away on opening. Just running through some of those names. SR Oil also showing some bit of strength is where we're seeing a volume spike. MEP Infra, the recent listing as well. Mindtree still holding steady with 4% gains. Top mid-cap picks, Mayuresh, in this market because you've seen again the mid-caps really outperform the benchmark, because even though we are at 8,600, the mid-caps have been enjoying a decent run for almost weeks now. Anything that's probably still looking attractive that one can still look at?
So clearly I think a couple of stocks that we still continue to like. Surya Roshni on the lighting and luminous part is something that we still continue to prefer. The numbers might not be that great for the next couple of quarters for Surya Roshni. More to do with how the steel business is panning out and the kind of debt and EBIT erosion that the company is facing on that business vertical. The lighting segment is holding up pretty strong for Surya Roshni. I think we're expecting a good amount of earnings growth to take place over the next couple of years. Similarly, I think within the education space, MT Educate is a stock that we feel is highly undervalued at the current juncture. The kind of tie-up that it has done with Shri Gayatri Institute of Hyderabad, I think that will add huge amount of students, 33,000 students, which is almost 42% of all the catering of students is happening at the current juncture. So I think a 21% top line growth, a 19% bottom line growth, margins stabilizing at 18% and valuations close to 12.8 times. I think it looks like a very good value pick from a medium to long term perspective.
ACC is the other one as well that we're tracking today. Mayuresh, any comment there ahead of earnings or on the cement play?
So clearly I think cement is going to see some amount of weakness. Realizations are expected to go down on a quarter-on-quarter basis. However, I think in terms of the raw material costs, you're seeing decline happening in terms of both pet coke and imported coal. The crude fall that we've probably witnessed in the past few weeks with a lag effect should have a positive impact in terms of how the margins would pan out going forward, and there would be positive operating leverage for a lot of these companies. So I think the expectation to the markets is laying off for a lot of these players is that the demand recovery will be much faster in the coming few quarters. I think the cost push inflation that we've probably seen in terms of realizations going down and raw material prices not going down that significantly, that should balance itself out over the next few quarters as well. And again, I think in terms of valuations, I think a few mid-cap cement companies is something that we continue to prefer. So yes, I think ACC in terms of numbers, I think expected to be down, profits expected to be around 20% on a YOY basis, margins expected to be between the 10-11% range, at least for this quarter to come. Dispatches close to that 6.65 MT mark for this quarter. But clearly, I think in terms of valuations at an EV to turnover $118, ACC is attractively priced. So yes, I think we do like ACC Ultratech from large cap names and names like JK Lakshmi, JK Cement from the mid cap bag. But I think one must understand that the next couple of quarters will still be weak and soft when it comes to earnings.
All right, Mayuresh, fair enough. Thanks for joining in this morning with your thoughts and perspective on the markets and what you're working with in regard to stocks as well. But once again, it's been a strong move that we're seeing on the markets. 86.36 now. It's a gain of almost 0.3%, and the mid caps once again outperforming.
All right, time for us to wrap up, Priyank. We've got In Business coming up next. Harsha's joining us. Morning, Harsha.
Morning, guys. I'm going to focus on the markets. Is there more fuel left to this rally? Will this momentum sustain? That discussion coming up next.